Hello, everyone, and welcome to the panel discussion entitled, Can an Evolution in Payments Open Up the World of Finance? I'm Joy McKnight, editor of The Banker. Before we start, I just wanted to remind the audience that you can ask questions at any time via the Q&A chat box on your screen, and we'll get to these questions during the session. You can also share tweets via #BankingRevolution. With me are three panelists spanning the globe and the payments industry. I have Keith Gross, who's head of international at Plaid. I have Shashank Mehta, head of RazorPay X at RazorPay, and Cindy Young, managing director of Europe at Ripple. Thanks so much for joining me today. So I think that many would argue really that we're going through a payments revolution. Even before the pandemic, we've seen this explosion of real-time payments, QR codes, e-wallets, cryptocurrencies, open banking, pay tech firms of all shapes and sizes. And there's just so much going on. And of course, the pandemic has just turbocharged this change. Shashank, I was going to pose the first question to you. What is the most impactful innovation in payments from your perspective?
Thank you, Joy, and good to be on this panel, I think, discussing this topic, right? There's a lot that's happening in this space. I'm going to talk a lot from the India perspective, where the entire fintech industry has been quite on the up and going, and there's a lot that's been happening. In fact, for India, the entire payments, magnitude shift actually happened before the pandemic itself, when India went through a pretty big event called as a demonetization, where all the large currencies of India, the cash notes, were actually deregulated. They were moved out of the ecosystem, and the new notes were issued. The idea being that they wanted to kind of eliminate illegal cash from circulation. But essentially what happened is, till the time that new cash was made available, right? People couldn't really pay by cash. And India before this was a very heavy cash economy. It still is to a large extent, but digital payments still were in the early days. And what happened, and this is back in, I think, 2017, and what essentially happened overnight is there was a very quick adoption of digital payment methods like wallets, where you can load money and do transactions. There's another payment method that has been made in India itself called UPI, Unified Payments Instrument, which is an instant peer-to-peer money transfer mechanism. So what exactly happened is, you've suddenly gone to from a world where most people don't even understand, what is an ACH, what is an NEFT, which is a local method at India, it's called, right? People don't understand this. All they know is that I have money. It's in some kind of an account, whether it's a wallet or a bank account. And what I really need is a means of making a payment, whether it's to my friend for splitting the dinner that I had last night, whether it's to, for a subscription that I'm kind of really taking, or a expense in a shop that I want to kind of make. People want to pay very seamlessly. And what they understand in today's agent world is a mobile phone. They understand QR codes. They understand phone numbers, right? They don't understand bank account numbers, routing codes and SWIFT codes and whatnot. And I think one of the key innovations that really sparked the payment revolution at India was when UPI was launched, and it made it as simple as just going to a Google Pay account, connecting your bank account, which was very seamless to do. Just input your friend's phone number and that's it. They instantly get the money. And the money is not just a confirmation, but the friend can actually go to a bank, withdraw that cash and receive it immediately. It's instant, it's in seconds. And imagine it's wrapped up in a manner where for the user, right, all they have to know is a mobile app, which they are accustomed to using. India has very deep internet penetration now. They have phone numbers to deal with, which they already understand. They use WhatsApp. They're accustomed to dealing with phone numbers. And now that same phone number allows them to pay to a business, to a friend, to anyone, right? I think this kind of a innovation has really, really propelled payments to a very, very deep penetration in India. And I think when the pandemic happened, for us in India, I think one of the key things was that we saw further adoption of this mechanism, because even in tier 2, tier 3 cities, there was lockdown that was happening. And I think having a very simple payment mechanism like this, I think, has been a fantastic innovation that at least India has seen. And we hope to kind of take it to a few more countries as UPI kind of spreads around in the market.
Excellent. And Keith, maybe the same question to you, and then I'll turn to Cindy. But what would you say is the biggest innovation that you've seen in payments?
Yeah, I think maybe following on from what Shashank said, I would say the shift to API-based digital payment methods. And I think my favorite stat that I like to refer back to is in 2020, it was the first year that digital wallet payments overtook cash, which is a pretty massive change. Cash has been the way most people have paid in history, in modern history. And it was the first year last year where really more people made payments using digital wallets. And what enabled that is all these API-based digital payment tools. In India, you have UPI, you have open banking in Europe, you have open banking networks that span the globe, you have crypto payments. There's all these different methods, but that's the big sea change, is the tools and infrastructure underlying digital payments were already there and ready. So this inevitable trend was happening, and then COVID forced everyone to adopt it, and it's hit a new watermark, and I think it's here to stay. And so that innovation of you have the tools to plug in digital payment methods wherever you are in any app or service digitally, that's definitely the biggest sea change that I've seen.
But building onto that, I think India is a very interesting example. Obviously, the use of digital wallets, and I agree with Keith around the sort of infrastructure. I think over the last 2 decades, certainly financial services has gone, not just payments, financial services has gone through a massive digital transformation. And it's really, if you kind of take few steps back, I think it's very much driven by cloud computing and proliferation of smartphones, which essentially made basically checking our, bank balances on the go, paying with a simple click, etc., possible. Cloud computing essentially brought in the flexibility and agility at a fraction of the cost to before to all these payments and banking providers, and with increased resiliency and security. But I think despite the immensity I think of this change, what I feel is we've largely replicated our physical experiences in the digital world. And I think the next wave of this big innovation is coming from crypto and blockchain, and it's already underway, but I think, it's going to be even more so in the next 10 years, because they provide an opportunity to design fresh, digitally native experiences that are much better fit for the way we live our lives today, which is on demand, global, much more requiring sort of seamless cross-border movement of value and money. And also make the world, I think, and the payments a lot more efficient, transparent, and also inclusive. So I think the change that is ahead of us, which is driven not only but very largely from crypto and blockchain technologies, I think it's an opportunity for like a 10x change, much bigger than I think what we've had over the last 10, 20 years.
So Sandy, can you go into a bit more detail and really explaining how cryptocurrencies and blockchain is really starting to drive this innovation?
Yeah. As I said, I really believe they're the biggest sort of drivers of change in the next 10 years, right? There was just a recent World Economic Forum report, which suggests that 10% of the world's GDP will be tokenized by 2027, worth as much as $24 trillion. And one way to sort of dive a little bit deeper, I think one way that crypto and blockchain are driving innovation is by bringing efficiencies, right? Today's financial infrastructure, payments infrastructure is decades old. It's not fit for purpose for the way we live, work, trade, send money, etc. today. And the legacy methods, which is primarily sort of cross-border correspondent banking, SWIFT, is antiquated and inefficient. So, I mean, just to throw some examples, today, despite a lot of the innovation that's been happening, still it takes an average of 3 days to send money abroad. It costs about, to send $100 from, like, let's say, San Diego to Mexico City, it costs around $7. 6% of all payments are stuck in transit. And in addition to that, payment providers, banks, etc., they need to pre-fund accounts across the different countries in multiple currencies. Today, we have $10 trillion of trapped capital in the financial system, just sitting there idle, not contributing anything. And if you look at how the cross-border payments sort of happening, is you have to source FX via fiat during regular banking hours, which obviously, limited and different across different parts of the world. And then the settlement happens later, usually T+2. And these are two distinct steps, which means, expensive, error-prone, inefficient, slow. Whereas bringing in some of the benefits from, crypto blockchain technologies, you can essentially combine the FX sourcing with the settlement, and then payments can be done 24/7, 365 days a year, with instant settlement. I love the example of, you wake up on a Christmas morning and, whoops, forgot to send some money somewhere, and it happens. And in addition, you can free up this $10 trillion of trapped capital I mentioned via the huge pools of liquidity that exist today, right? Like, this is a very recent development. no longer we're talking about few exchanges with a couple of million in volume. Today, there's billions of volume in crypto liquidity across the world. And then by tokenizing fiat, essentially you can provide on and off ramps. And obviously there's a lot of exchanges, stablecoins, etc. There's a lot of development there that's trying to make that happen. I think remittances is a really, really good example where this changes was already happening, really on the way and delivering a lot of benefits. Remittances is obviously the money basically migrants sending back home. And in some countries, right, this is not just critical, but sometimes only source of income for the family, right? If you look at Philippines, it's 10% of their GDP. Some places it goes up to 35, 37%. And in this scenario, every penny really counts because it makes a difference between someone being able to, pay their rent or pay for the hospital or, and here the lower cost, the speed of the settlement, the transparency, the benefits are a lot more pronounced. And we see this, from our own experience at Ripple every day because a big portion of our customers are remittance providers. And they've been using the on-demand liquidity service that we've been offering, which essentially uses, XRP as a bridge currency to move money across. Whereas we use it obviously in a B2B scenario, but the benefits are to the end consumers.
Excellent. And Shashank, do you agree that crypto and blockchain technology is making this big impact, or what do you see the future of infrastructure is?
Right. I think I think a lot of the promise, I think what Sandy talked about, right, in terms of being able to transfer money seamlessly, it's not for the lack of technology in itself or whether it's capable in terms of whether technology itself remains or not, right? I think the challenge comes up in terms of the infra that we're using. If the infra itself is built for a completely different world, right, where it was built for, let's say, an offline cash-based transaction model where digitally money would move only in large bulk, right, when, let's say, there's a settlement that's happening across between banks, but the interface with the world is largely through cash, right? I think that expecting the same infra to kind of scale up for a digital world, I think, is where the challenge is. Now, countries like India, for example, have invested in technologies like UPI, as I mentioned, right, which enables instant money movement to happen between two people in seconds without any cost element along attached to it and whatnot, right? It's possible. So within a country, within, let's say, a particular nation, if they're really motivated, I think technology is still available. It doesn't have to necessarily be blockchain, I think. But at the same time, what I do necessarily believe that, technology around crypto and blockchain that's coming up, I think it's a large scale infrastructure development happening at a global level. Trying to innovate at that level requires consensus building across so many different parties, so many different regulators, so many different banks. And that's one of the fundamental reasons, in my opinion, why we haven't seen, let's say, a lot of innovation happening at a global scale for money movement, because the number of people involved, number of stakeholders involved is massive. And I think the entire crypto movement that's happening is creating this parallel infrastructure, which is built for a digital world. And I do believe that at least at a global level, right, this will definitely make sense. Within countries, I think each country will have to figure out how does it interface with their economy. Maybe it's inevitable at some point that, at a country level also economy will move to like a crypto-based technology or something like that, right? But is it necessary? May not be right now, and some countries might want to kind of prefer to have good control, especially depending on how their economy is. But at the same time, I think the entire infrastructure that's being enabled at a global level, that kind of an investment would have taken many, many years, maybe a central federation kind of mandating this to happen across all participating countries, and maybe a 20, 30-year project, which I think crypto is completely short-circuiting and giving a product built for today's digital world. I think that's how I really think about it. I think there are solutions available at a country level, but crypto is a very large-scale infrastructure development that's happening. Each country has to figure out how to interface with it, though.
Okay, and Keith, I would love to get your thoughts on this as well.
Yeah, I think crypto is interesting, but I think similar to what Shashank was saying, I think it depends on the infrastructure, and a lot of the infrastructure for immediate money movement already exists today. There are real-time payment rails across the UK and Europe that you can use to instantly send payments to different accounts at a fraction of the cost of previous payment methods. And so, I actually think that the role of embedded finance and the innovation that's happening at the fiat level is going to be just as important as longer term trends that you're seeing at the crypto level. And so you're starting to see that innovation happen every day, and remittance companies being able to access and move money out of individuals' bank accounts directly to merchant bank accounts constantly at an instant, settling in seconds. And so I do think it depends on the infrastructure you have. I would agree that SWIFT and some other payment methods were slow and outdated, but I think a lot of governments have gone a long way to improving the infrastructure today, and real-time payments are becoming a reality in the fiat world as well.
Excellent. And so where do you see that further growth and evolution will come from in this really fast-moving space?
Yeah, I think something that I see today and on the horizon, where I think is really going to be a huge driver, is what I call embedded finance, which is essentially the idea that you should expect to see payments and financial services showing up anywhere there's a big user base on a digital app or service. You're already seeing this with like ride sharing companies providing loans and bank accounts to their drivers. You're seeing this with Microsoft allowing you to track your personal bank account information. You're seeing this with all the largest companies starting to experiment with how do I use financial services? And that's a really big development. And I think that's really going to push the innovation and adoption of fintech and digital payments to a different level. And I actually think that's going to start in Europe first, frankly, because I think Europe has created a really great regulatory framework. And as I mentioned before, they already have real-time payment rails. They have a licensing and regulatory structure around all of this. And so in the same way that cards and chip and pin took off here early, I do think that the growth of embedded finance from a digital perspective is where you're going to see the growth in payments and the innovation side of it. And you're going to see that coming out of Europe and spreading into other regions as well.
And Sandy, what do you think about embedded finance? And, is that something that's on your radar?
Yeah, I mean, certainly, it won't come from one place with multiple different developments, some of which, we've touched base on. Certainly, embedded finance is a big driver. Also, completely agree that I think some of the innovation still happening, just even in the fiat world with real-time payments is still quite important. And some of these essentially will, like a lot of them, I see them working in a complementary way to each other, right? Again, some of these sort of cross-border efficiencies that I suggested almost, make a international, sending money, I don't know, from Mexico City to the Philippines feel like it's actually just a domestic payment, but you still need that domestic rails and you can still benefit from that. So I can see that, yeah, as in complementary, working in a complementary way. I think that kind of another important thing, I think we touched a lot about the infrastructure. I think that's what's now exciting. I think in the last sort of 20 years or so, there's been a lot more innovation, more on the front end customer experience, the kind of moving to online banking and digital banking, mobile banking, etc. I think a big shift is whether we see it in sort of blockchain, real-time payments in a sort of way, movement to standardized protocols, ISO 20 or 22, for example, I think is also a big change and big driver of future growth because that just makes basically moving better data, more data along with the payments and make it a lot more efficient to work across different infrastructures.
Okay, great. We have a few questions coming in, but I thought I'd ask sort of one more question from myself. Shashank, I was going to point this to you. What is the potential for digital B2B payments or business-to-business payments sort of growing in line with the business-to-consumer payments, B2C, that we've been seeing today?
Yeah, I think extending, from the previous point that Sandy and I think Keith also talked about, right? Essentially, what's happening with entire embedded finance is that we're making the entire banking aspects and transaction aspects personal, right? Instead of giving like a one-size-fits-all solution that fits for every single, customer profile across every kind of a vertical. Instead, embedded finance is basically trying to kind of move it to a model where you can customize it to the needs of a particular segment. Like, for example, a farmer's need around banking is very different from a student traveling abroad for studies versus, a business trying to manage the business expenses. And I think till the time we are working on the core infra, which is where a lot of the innovation has happened so far, that was largely about, giving rails for money to move effectively. How do we essentially have instant money movement, instant settlements happening? And I think that direction, there's a lot of development that has effectively happened in a lot of countries. As Keith mentioned, in the Europe region, in India, we have so many innovations that have happened, right? I think the next stage that I'm seeing, especially on the B2B side, right, is that you can transfer money. I think the capability to transfer money has come in and has come in well. But the challenge for whether it's B2C or even B2B, right, is the entire context around the transaction. For example, a payment like a payroll, when you're processing salary for an employee in India, for example, there are 5 different kind of compliance payments that need to be made on top of that salary payment. And imagine for a business, when they have to actually process salary for 100 employees, it's 100 transactions to the employees' accounts plus 100 into 5 different kind of compliance transactions that you have to make. It's a big overhead for a business to deal with, right? That's something that they have to kind of do, and it doesn't add any value to the business. A business, processing payroll, let's say very quickly versus doing it late. The only difference is that you're spending energy on something that doesn't add value to your top line or the bottom line. Instead, what you really want to be looking for is an automation around this kind of a transaction with context. I can set a instruction saying that, okay, pay this person this much salary every single month, but it doesn't take care of any of the context around it. And I think a lot of the innovation on the B2B side, particularly, where every transaction has different kind of accounting practices around it, different kind of compliances around it, right? Payroll is very different from an invoice being paid, is very different from the general taxes that you pay on your profits. It's very different in each of the transactions. So I think for businesses, the entire idea around transactions would be, can you make it transparent for me? If I press a button for processing payroll, that should take care of my compliance payment, right? Why do I need to know that it's actually 5 transactions actually? Do I need to be worried about it, right? And our fundamental belief at Razorpay, when you're working on the neo-banking for businesses, is that if we can free up the businesses from having to focus on these overheads, things that don't add value, that much more time and energy that they have available to focus on their core business growth, how to get customers better, how to serve them better, how to build better products, right? And I think unlocking this essentially means that how do we make it easy for any person to run a business? And the easier we can make, the more people can actually participate in the formal business economy, and we will have that much growth of the economy, right? I think that's how we really stitch together the narrative that essentially finance, the context is very important. And I think a lot of the innovation on the B2B side is by getting this automation and context based automation to come into place. And that's how I think B2B will keep pace with B2C. I think there's a lot of innovation to be done there. There's a lot of work that's happened on the B2C side. But yeah, we can build for context, solve for it. I think that's what will benefit the businesses.
And Keith, do you think, and then I'll go to the audience questions, but Keith, do you think that there is this drive to this convergence between B2B and B2C? And if so, what is driving that?
I'm not sure if I would use the word convergence, but I definitely agree with Shashank that there are huge pain points to be solved on the B2B side as well. They're slightly different, right? Like B2B is an area too where I think there's a huge value in financial data and transparency, both to solve the complexity that Shashank talks about, but also to be able to track the health of your business and automatically apply for loans and understand the financial health of the business that you're running. That's actually a very time-intensive process and complex process today. And these are aspects where I think you are seeing a convergence between the consumer side and the business side in terms of recognizing the value of payments as data and being able to make real-time insights and decision-making off of that, and then automate control of your financial life, be it paying payroll, applying for loans, you name it. I do think that's where you're seeing a convergence. I think the big differences lie in, obviously, on the consumer side, very high volume, small dollar value type of business. And on the business side, it's actually fewer payments, but very high dollar value and high value. And so it's just a slightly different segment. But I think the pain points are real. And there are lots of ways that I think infrastructure changes, open banking, compliance, APIs, all of this can make a huge difference in the value to businesses as we go forward.
I mean, what I would add to that is, I think, I would agree that I don't think there's a sort of real convergence, but it is true that the customer experience and the demands from our everyday experiences essentially translate to expectations in the B2B world. But that context is very important. Essentially, it's a very different use case at the end of the day. It's more of that, again, immediacy of the experience, your, single click Amazon, shopping, tracking purchases in real time, or, being able to, use different devices to, for the same information in a seamless way. So we expect kind of the similar things in the workplace and driving maybe some of that innovation in the B2B space from an experience perspective. Having said that, I think when we look at the kind of nature of mainly like e-commerce, SMEs, that is also kind of changing and then therefore, changing the expectations and the needs of the transactions, right? Again, requiring, today, especially with COVID, right? SMEs now require global reach from day one, not later. which means, not just access to banking networks, but they also need to access the different sort of payout networks, Alipay, M-Pesa, and wherever they operate. They need to be able to provide, goods and services to their customers on demand in real time. So they expect the payments to follow that, going back to that embedded and kind of almost contextual payment experience. Otherwise, they're going to risk losing their suppliers, customers, developers, whoever the partners they're working with. And they need to process, again, a lot more sort of low value payments on demand at high velocity, not maybe in a batch, maybe in the older world that they would have done. So given this pace of the business and changing nature of both the way we live our lives and we conduct our business, I think that is kind of driving, let's say, expectations of the consumer world translating to B2B world. But essentially what will bring that innovation to life is quite different, with requirements for automation or integration with other tools that businesses use, etc., which Shashank and Keith touched on.
All right, I was going to bring in an audience question, which I think is quite interesting, which is around: do merchants care about the data surrounding a payment more than the actual payment itself? And doesn't this create a greater innovation opportunity, maybe in marketing? Sandy, I don't know if you want to touch on that, or...
I mean, we don't particularly touch, I certainly, I personally think merchants certainly do care of the data, because that is an opportunity to, yes, marketing, but know their customers better, offer much more tailored, products and services. It can be used in a myriad of ways. I mean, is it more important than the payments itself? I think probably equally important. You still want to get the payment, but payments, the means to get to that data. Yeah.
I would chime in. I would fully agree with that. Like, I guess with that last point, obviously getting paid in cash flow is the number one thing as a business. So I don't think you can say the data is more important than the payment, but payments are data. And I think what you're starting to see is merchants recognize the value of being able to contextualize, draw insights, and automate experiences off of the data they have, be it marketing to consumers more efficiently or being able to automatically audit and verify their financials with their accountants. And you're starting to see mirrors of that. For example, we see players like Kodak that are pulling accounting data and using open banking platforms like Plaid to automatically reconcile and verify the authenticity of that accounting data. Those are examples of places where you're seeing data have real value to merchants in an automated way, and then being able to take that data and think about how does it affect your audiences going forward, and how can you use it in marketing use cases as well, I think is something that a lot of small businesses are looking at. So it certainly is something where the awareness of that value to a small business is growing, and the expectation of access to that and ability to draw insights from it is definitely growing as well.
Okay, great. There are a couple of specific questions on India, Shashank. And so I was going to ask, the first one was around, which I think you touched on a little bit, but the question is, while blockchain-based currencies make sense for cross-border payments, but for a country like India, would it make more sense to expand UPI overseas or hop onto the crypto bandwagon?
Yes, sir. In terms of, I think, in terms of UPI, it's largely at the end of the day an infrastructure, right? It's an infrastructure that allows for money movement to happen very quickly. And the reason why Indian government is actually looking at kind of exporting UPI, if I may say so, right, is that because there are countries which are looking to adopt this technology, this infrastructure that has been created, right? It's a complex system which can orchestrate payments across multiple banks and do the settlement and provide the customer the actual money in various forms and manner, right? I think that's the technology which is kind of being largely exported where countries are interested. We've recently, I think, also announced that India is connecting its UPI network with Singapore's fast payment network for interoperability, right? And those are things that I think the government will look at, right? I don't think anyone will ever think of a one single track strategy, right? That, okay, crypto is the only way to go forward. I think it does make sense for India to look at how we can participate in the cryptocurrency and everything that's happening on that side. So far, the Indian regulators have taken a more cautious approach to it, which I think, given the Indian scenario, right, where there's a lot of fear about money loss, fraud, and whatnot, it makes sense maybe for the country, right? So I think it would be a two-pronged strategy. Look at your current standard mechanisms and see if you can make it broader and wider with different participating countries. And at the same time, maybe I think it would make sense for us to explore and how we can kind of utilize crypto, for example, particularly cross-border. But yeah, it will have to kind of fit into the Indian ecosystem in terms of how they're looking to operate. So that's how I would really think about this.
I think also given, as long as we have fragmentation in the infrastructure, right, which, I would love to live in a world where there is none of it, but I don't think it will be in my lifetime, hopefully one day. Even with blockchain, like I see a world where there might be different kind of blockchains used for different reasons. Some countries adopting their, own CBDCs, etc. Some private cryptocurrencies exist in some public. So I think we will, in a way, as far as I can see, always live in a world where there will be some fragmentation and different fiat crypto versions used for different cases. And for that reason, I think the interoperability, which today is still already very important, right? Like, talking about UPI being now integrated with the Singapore real-time payments network. But how many of those integration are you going to do? Will you connect it to hundreds of countries around the world to have that super, interoperable world? So I think we need that almost a solution, which again, what we have found that using that XRP as a bridge currency in the solutions that we provide customers allows that interoperability across different systems, where we get the benefit of the sort of crypto blockchain technology, but also take advantage of the great infrastructure that works where we have real-time payments in some parts of the world.
I would fully agree with that, because I think, and we've touched on this a little bit earlier, that I think one of the constant tensions you face in the world of financial services is every individual government always wants to maintain control over their financial system within their economy. But then in the digital world, businesses want to be able to accept and move money and manage their finances across borders. And I think this is where third-party providers like Plaid, Ripple, others, we all come in and help bridge that gap by providing that interoperability layer. And so I think we've seen this by being one of the transatlantic bridges, but that is a natural tension within financial services. And I agree with Sandy fully that I don't see that tension being solved by any one government in the future.
The next question was around your regulation. So the question is, the problem with European regulation, there's just too much of it and it kills innovation. Whereas the crypto blockchain is a region and regulatory agnostic, which is a big plus. What does the panel think?
I would actually say, I mean, I don't think the regulation in Europe or UK, kills innovation, to be honest. I think it actually fosters. I mean, if we look at different parts of the world and how they're approaching different kinds of regulation, right? I mean, I think Europe and UK is honestly leading in terms of fintech innovation, just finding the right balance of not kind of taking sides, but looking at the risks and making sure they protect investors and the public, etc. But setting out that framework that allows innovation. I mean, is it perfect? No. I mean, I don't think there's any regulation, any solution we provide that is perfect. There's always some challenges, but I think it's some of the best that we look in the world. Again, I mean, I'm obviously more closer to the crypto blockchain space, which obviously regulation is a very, very important puzzle in the game, just like I guess the rest of the financial services. But we see the US being kind of so fragmented and very unclear in terms of setting the rules of the road, and potentially causing damage around innovation happening there. Whereas again, from a crypto blockchain perspective, we have the MiCA sort of draft regulation in Europe, which is trying to set the flow and the consistency and harmonization across Europe. In the UK, again, we have very clear guidelines from FCA around how digital assets are classified based on their use case. So I think when done right, and when done in partnership with industry and in consultation and really understanding the promise of the technology, I think it can be a boost to innovation as opposed to a detriment to innovation.
Yeah, I would fully agree with that. I think I've seen both sides of that as well, because working in open banking in the US, it's not regulated. There's a principle that consumers can access their data, but there's no regulatory framework on how that should happen. Whereas in Europe, it's prescriptive with the Second Payment Services Directive, and there's pros and cons to both approach. But I think ultimately regulation is about protecting consumers and ensuring that there's safety there, and that's really important. And so if executed properly, regulation provides the guardrails. And I really agree with Sandy's point of you have to involve the ecosystem and you have to involve the players, because I think regulators have to think 5 to 10 years ahead, because by the time regulation is written, enforced, and out in the market, that's the timeline it will take. And so you're trying to read the tea leaves about where the train is headed. And you can only do that if you work hand in hand with the ecosystem. But if done properly, it actually creates a better space for innovation, frankly, because everyone knows the rules, they know how things should happen, and consumers then feel the safety to be able to use new and innovative payment methods. And so I think I've been really excited to see open banking flourish in Europe, and I think it's precisely because of the regulatory approach they've taken here.
Yeah, and I think completely aligned to what Keith and Sandy have said, right? It comes to a model where I think regulations can definitely help with adoption much faster. Imagine in a country like India, right? We actually have regulations around every payment requiring a two-factor authentication, because imagine somebody who has never transacted online. They first make a payment, the second one is a fraudulent transaction. They're never coming back online. And if you have to really move the country towards digital payments, right, we cannot do it in a manner which is so disruptive that the masses get affected. And I think regulations do a fantastic job at that. At a controlled release, it's almost like setting up a framework for go-to-market, right, and how this innovation can really start affecting the masses. And I think that's very important. That said, a lot of the people in the ecosystem will say that regulation is great and everything. I think what's important for us to understand is that regulations work very well for a step 1 to 2 step function improvement in the current systems. But when you're imagining something brand new, right, if you're trying to imagine something which cuts across borders and trying to create like a completely alternate system to something like a Swift, trying to even regulate that is very hard. And I think that's the place where the innovation of crypto is really interesting. I think when it reaches to a stage where we are looking at connecting the local money, the fiat system with the crypto systems, that interface is where I think, again, regulations will play a very important role to figure out how will the local population really interact with crypto. But until it's at a state where the different regulators can really define it or even look at whether it makes sense for them or not, it's important for us to still have that innovation happening in this world, in the cryptocurrency world, and then the regulators can take a call of how to interface their economy with it. So yeah, I think it's not an or decision. It has to be an and. Both of it has to go together, and there are nuances in each of the layer when you operate at it.
Sandy, did you want to add anything?
No, thank you.
Okay. Perfect. Well, we'll ask a couple more questions. One is another one to Shashank, which is around another Indian question about what is needed to make digital payment systems valuable and attractive for poor households in India, as maybe large chunks of the population are not as financially literate. Well, I have to say, you can say the same thing about the UK, but especially in a digital term.
I think ultimately, that's when you look at something like UPI, right? It didn't succeed because it was just an instant mechanism, right, which have existed in a lot of countries. I think the reason why it's even picked up in India is ultimately it brought it down to terminologies that the average population understands really well. They're very well versed with it. In India, we saw a massive boom of internet penetration because we had a company called Jio, which gave out internet at the cheapest rate in the world. The per GB dollar rate at India is probably the lowest in the world, right? Which basically led to a massive penetration of internet in itself. The second thing that happened is the launch of mechanisms like this, which people understand. Everyone understands the phone number. Everyone understands the mobile app, given that Android and internet has really well penetrated, right? I think the question is still valid, though, that just giving an access, is it sufficient? Is there a literacy element aligned with it also? And there's a reason why people still prefer cash in a lot of pockets, and in fact, large pockets of the country, right? Because it's a familiar tool. It's a familiar tool. You can feel cash in your hand. It's there. If you're holding a 100 rupee note, it's there, right? Which is why in a country like India, regulations play a very important role for, GTM of any new mechanism, which is why it's important that, if as we get more and more into these segments, I think a controlled release that protects the customer's interest is very important. That's one. Second is, I think the next wave of adoption when it comes to digital mechanisms, that's going to start coming in as we start creating custom products for different segments. As I was mentioning earlier, right? Largely our financial products, even in today's age and time, are one size fit all. One single thing has to serve every single customer in India. But that's not going to be the case, right? A lot of people, for example, as I mentioned earlier, a student in India moving to US for their studies, they need a working card with US dollars in it the moment they land in the country, which is in the earlier times was very hard for them. So they would carry cash. But there are companies in India which now give the student a prepaid card with dollars added to it, and it's working the day they land, right? Now, this is how this segment is kind of adopting more and more of, let's say, the modern technology. There is another company which is looking at specifically building financial solutions for farmers, looking at how their crop cycles run and what kind of cash needs that they might have, lending needs that they might have, right? As we go more into building segment-wise solutions, right, is I think when it will fit better for some of these people to also adopt these practices. For a lot of folks right now, maybe living in a particular small town, digital mechanism gives them nothing new on top of handing over a cash. So you really have to create a solution that serves that segment, right? That creates a new value add for that segment. You can't just say, hey, cash is bad, use technology. It's going to be more about, okay, in your context, this is how technology helps you with something new, which earlier cash couldn't solve for, right? So I think that will really help with more penetration of digital mechanisms in even more of the segments of India.
Okay, fantastic. I'm afraid we're coming to the end of the panel, which is a shame because it's been such an interesting discussion. But I have a question, which is we've been talking a lot about open banking, open APIs. That's how we started the discussion. But now more people are talking about open finance and open data. How can we evolve and what will drive that evolution from open banking to open data, open finance? Keith, would you like to step in?
Yeah, and I think maybe to offer a quick definition there for people that aren't familiar, open banking is the idea that you have access to your payments data and your bank account data. Open finance is the idea of extending that into all of your data as a consumer that gives you a holistic view of your financial life. And I think you're starting to see this happen from a regulatory perspective. You have the consumer data right in Australia, you have Brazil, Canada, US, all considering this. The UK is considering opening up an open finance regulatory framework here as well. And I think the reason why that's so important is you're heading to a world where people realize that they leave a digital footprint and they should own that. That is not somebody else's data, a platform's data, a bank's data, it's their data. And it can actually be incredibly useful for managing your financial life. And so I do think we're going to see this transition. I think it requires, as we talked about earlier, a regulatory framework that's built around working with the ecosystem and thinking about what are the right guardrails to put around this, but also let innovation flourish and figure out what are the right use cases here. But I think we're clearly headed in that direction, and it's something that I'm certainly focused on and trying to track across multiple geographies and make sure that we can provide the right tools and infrastructure to make this data useful for people. But I think that's the big switch that's happened. It's similar to GDPR, is people are realizing any data is my data, and I should be able to own that and make it useful for myself.
And Sandy, do you have anything to add?
Yeah, I mean, I think I also agree that I think we will certainly see a movement towards open finance in some places more advanced versus others. And again, I think partly just like open banking, I think part of this will be driven more like kind of top-down regulation. Some will be more like organic industry. There's not sort of one way it will progress, but I'm really excited about that kind of the future that we're seeing. The trend is towards more openness and more decentralized, right? Not the other way around. It's all about opening up the data and the infrastructure so that more people can access this, can get better value out of it. Those who are unbanked today can get into the financial system. I think a lot of the developments, innovations, regulations, etc., that we touched on is kind of pointing in that direction, and I'm really excited about that.
And Shashank?
Yeah, I think apart from what I think Keith and Sandy have covered, right, only the last part that I would add is that apart from just the access to data, right, I think people need to also, we need our markets to mature to understand the value of the data and metadata around it, right? And I think that's happening at a pretty rapid pace also. Businesses particularly are kind of understanding, right? It's not about that money anymore. It's not about that transaction. It's not about that balance, right? It's about how can I leverage that to really grow my business in a better way, right? And that's where the need for having control of their data even comes from. And I think that's where it starts, the move starts from, where the customer is asking that, look, I need something better, right? And I think what we touched upon earlier, the entire aspect of solving for context around these transactions, context of banking, is what really takes it from open banking to open finance, right? Where you bring in the context of finance and banking, you marry it together. That's when it will start making sense, and that's where the customers will see value from it.
Okay, great. Well, I'm so sorry, but we need to wrap up. But a huge thanks to Sandy, Shashank, and Keith. Just a quick reminder that this session is available on demand on the website for 30 days. Now stay tuned for the next session, which is a fireside chat with Guy Opperman, MP, UK Minister for Pensions and Financial Inclusion, in conversation with Stephen Morris, FT Banking Editor. Thank you so much.